Good morning. It is July the 8th, 2016, and time for maybe the most important news announcement of the month. Non-farm payrolls are expected at 180K. If greater than 200K, the talk will come back that the Fed can raise interest rates in July. If less than 130, no way they can raise rates probably until December, and that would be dependent upon who is elected president. Unemployment at 4.8. That number will grow because more people have stopped looking for work. That's how it grows. Is how it decreases. Private 170 private non-farm payroll numbers. Hourly earnings up 0.2. That's the default number, 34.4 for the average work week. And then Baker Hughes at 5. Last week was 507. That number could actually go up again, given favorable prices. So the whipsaw comes between these two numbers. It's always there. First, market will react first to non-farm payrolls, then second to unemployment, and then it gets down to what the actual numbers are after the investment committees, the strategists, review those. So greater than 200,000, and there could be a rebound this month because of last month's really low number. I think it was 38,000. Okay, we're close to the top of the trading range in treasuries, this 134 area. So overnight, some people took some profits in front of the numbers, and that's where we find ourselves right now. The high was reached in Asia, so we've got pretty good resistance starting at 24.28. So the first sell, if there weren't news today, would be 23.27. Second sell would be 31.03. On the buy side, first buy would be 13.17, just where we were last night, and second would be 5.9. But we do have news now. There's absolutely no liquidity on the news announcement. It just isn't there, and you're going to get slipped. And you can fill at the high or the low of the move off of that news. So what we recommend is a newsday trade. So if the news is positive, let's say in this instance for treasuries, and they rally, you've got the mode mean, you got the value area low, and you have where the news hit the market. Entry a tick above whichever is closer, the mode or the mean. You're almost guaranteed a fill at that. To get to the value area low or to where the news hit the market, you don't really want to get to where the news hit the market. If that is the case, you're looking for a place in this instance to sell it. But so your first entry is at mode mean, second entry is at the value area low, third entry, and this can come later in the day, would be where the news hit the market. If the market then does not take out that high right there, then exit your trade. So this strategy requires a nimbleness. You got to put the number out there. It requires fearlessness. Hard to trade with a stop. And then if we don't take out this number right there on the next attempt to take it out, get out of the trade. So pretty easy to make 6 to 8 30 seconds on the retest, depending on where this number is. After that, the market's just got to go. So that's the way that we recommend that you trade it if you are an experienced trader and if you're nimble. The other way is market moves up, searches for support. That's the first move. That's the profit taking, the counter that. find out where support is, come back up, and if it can't take out the high, then it'll come back down and retest this support level, and if it holds, we'll move into development. So there'll be sellers against the high, there'll be buyers against that support level. The market will gradually notch down and come to a balance point, and then it's ready for the next move. But the FOMC rate increase is really off the table unless we get a number greater than 200,000. If we do get a number greater than 200,000, then the news chatter will go back to rate increase possible in July. Okay, those buy and sell recommendations are where we would normally have them without news of this import. So keep that in mind. They are where support and resistance are. They could be a factor. Okay, looking at the 30-year, we've got resistance 16 to 20. So 23, 27, sell 1. 3 to 7, sell 2. On the buy side, 4 to 8 is the first little band of support. So 29 to 01, buy 1. And then 17 to 13, buy 2. And the reason I opened this up that much is because of where we are. We are at high. We're very, very close to the highs. This market has rallied. Okay, somebody in New York always knows the New York Fed is there. COMEX is in New York. New York makes their money on inside information. Gold is acting like we're going to hit that $180,000 number and maybe a little higher. Also a little profit taking. People that manage to be long and ride the market over 1350 might be rethinking those positions. So first buy would be 53.55, then 49 to 51 without news. That's really the only way that you can play this. On the sell side, you'd be selling 59 to 61, and then 64.66. But we do have news, and gold will react to it. Greater than 200,000. Actually at 180,000 as expected, gold should sell. And treasury should be off a little bit too. At 180,000, I would expect the euro to sell. So over 200,000, sell some more. Still going through all the Brexit reevaluations. They don't know who the next leader is going to be, or it's not official who the next Prime Minister of England will be, and that's who will do the bulk of the negotiating. So 110.50, buy 1. 110 even, buy 2. Still like the short side better. 111.25, sell 1. 111.50, sell 2. Best resistance is at the 111.50 area. Okay, crude is probably the least affected on the announcement. And usually what happens, and I just want to, I'll put this crude chart up here. certainly on the second day after a move, but we had this big breakout right here off the lows, and we got an extended range. But you can see when we have these long bars that we don't get a lot of action on the next day. Market usually pauses. That's not always true. Right here it ran for 3 more days, but here we have a long bar and the market pauses. Here we have a long bar and the market pauses. Not true in every instance. Here we have a long bar and the market pauses. Do get some extended selling right there. Here we have a long bar, the market pauses. So you'd have to guess on this market, probably a pause day. And that's the way we will play it today. So good chance that the low was made in the overnight session. Yesterday's lows were a little bit higher. So first place your eye would go to would be 46. We're at 45.60, so 45.75, 46, sell 1. And we have this area right up in here. So 46.25, 46.50, sell 2. On the buy side, 45 even, 45 and a quarter, buy 1. Then I'd say 44.50, 44 and a quarter for buy 2. So I don't expect the bottom to fall out of the market. I'd expect the market to probe higher and find out where resistance is. Where people are willing to sell it again. And then come back down, and I expect the overnight session lows, yesterday's lows, to hold. Okay, the E-mini's playing like we're going to have better than forecast numbers. It is up. Again, it's just, you know the numbers and you have the trade. There's just no way to get around that. There is no liquidity on the announcement. Usually by the end of the first minute we've got liquidity. The market comes back as players step up to the plate. So we've got resistance at 2100, 2102. Without news, you'd be selling 99s to 01s. Then you'd be selling 5s to 10s. On the buy side, you'd be buying 90, 92, and back to our 85, 87. Non-farm payrolls 180, greater than 200,000. Market's initial reaction will be up, and then it'll be whoops, raise interest rates come July. And it is Friday, probably some profit taking. Less than 130. Fed can't raise interest rates, might rally, but then at that point, I think we're at the top of the trading range. We'll find sellers in that 2100, 2105. Private non-farm payrolls 170. Nobody pays any attention to that number. 4.8 unemployment. The reason it'll be 4.8 is that more people have dropped out of the labor force. Plus 0.2 hourly earnings, 34.4, and people will look at this number to confirm the first two numbers, unemployment and non-farm payrolls. If it jumps to, if it drops to 34.3, then a weakening economy, weakening jobs market will be the inference drawn from that. 507 from Baker Hughes. Last week's number, I don't know what this number will be this week. Probably higher. Could be, given the price of oil. Okay, again, quick review. Newsday trade. Let's just say it's up. You got the mode mean right here. Got the value area low. And then you have where the news hit. So a limit, let's say the market moved up, a limit buy against whichever the mode or the mean is closer. Will almost always get you filled. Second place to fill would be a limit buy against the value area low. on that first reaction, you really don't want to go back to where the news hit the market. Everything would be suspect then. You shouldn't get back to that number. But later on in the day, if they fail to extend the range, you can get back to where the news hit the market. If the market then does not take out that high, exit your trade. A fade order 10 points away, wherever the news hits. So let's say the news was at 90. A fade order at 2100 or at 80 would be another way to play it. And there's no guarantee that, depending on the news, that 10 points will hold. But generally speaking, that first reaction to the news will be contained at 10 points. That's another way to play it. If you don't have the nimbleness or the experience or the stomach to take this type of trade, let the first move get over, comes back, in this case finds support, comes up, say resistance hold, then you're going to start to trade development right here. So on the E-mini it'll be plus or 4 to 5 points where the emerging mode is developing. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back on the news in 23 minutes, and we'll see what a Newsday trade looks like in a few.